Joining me in studio, our friend James Perry, founder of CIO Perry International Capital Partners. We have a lot to talk about, Jim. And let me just start with this July jobs number. And again, it's sort of a constant lament. Like, why do we even talk about the monthly jobs numbers? I feel like I'm participating in some charade. So 73,000 jobs in July, but that included a revision by Department of Labor of June's numbers down from 147 to 14, and a revision of May's job gains down from 144 to 19. The precision with which the Department of Labor operates and provides this useful data for us. I mean, should we just completely never talk about this again?
Short answer is...
Wait, bring that mic closer.
Oh, sorry about that.
Yeah.
How's that? Better?
Yeah.
Okay. Short answer is it's an important number because it's the first number of the month, right? And
but it's a number that doesn't mean anything.
It's a number that doesn't mean anything, and it's a number that is calculated by survey, which nobody answers. And
Perfect.
We have an official labor force in the country of about 160 million people. Estimates say it's more like 180 or 190 million people, which aren't counted, right? So you're kind of off before you start by 30 million people, right? Secondly, the immigration issue is very complicated. I heard yesterday that 1 million illegal immigrants voluntarily left the country in the last month or two. So, and they don't even know how many are here and if it means anything because nobody knows how many it is.
Nobody knows that number either.
Correct.
Yeah.
Right. So unofficially, there's probably 180 million people. That's a labor force that, quite honestly, has never been larger. And I think it really has been underestimated by the mainstream sort of thinking in the marketplace and narrative. And I really do believe that because GDP did bounce up from that low number in Q1, even GDP is hard to calculate. I mean, we don't know if it was flat in Q1 or up by 4% because the export-import numbers, they don't know exactly what the numbers are, really. So I do know that the disruption that this administration has imposed upon the economy is unsettling to people, and it makes them think negatively first, and then cooler minds prevail. And the jobs number is the same thing. All of a sudden, the odds of a rate cut went flying, higher today because there's two dissenters, and all of a sudden, the unemployment rate went to 4.2%. Well, again, the economy is running at full employment, and we still have a shortage of something like 5 to 7 million jobs out there. So to me, if you look past the short-term noise, this economy is going to continue to grow, and the labor force is going to continue to grow, and more people are going to enter the workforce. I didn't actually see the participation rate this morning because I've kind of been moving around today. But, there's probably space in the workforce that will allow for 10% more people working in the labor force that are now. It's about 62% or something like that.
Yeah, right. I mean,
they can go to 70.
Well, yeah, this is another sort of
get to work
static number, which is there's 6 to 8 million able-bodied people that could be in the workforce that aren't.
Yeah, you can't measure this stuff. If you can't measure it, you can't analyze.
Does it give us? I mean, is it even is there any utility even directionally that tells us anything, and maybe in combination with other data points that tells us anything about where things are going and what we should be optimistic about and what we should be leery of?
Right. That's a good question. I've come on this show for a few years now, and I come on and I appreciate that very much because it's interesting. But, if you look at things from a sort of a global macro perspective, you have to understand that all of these big economies, China, Japan, Europe, Canada here, it's really about the fiscal stimulus and the monetary stimulus that's coming into the economies from these big governments, right? So the GDP in this country is about $30 trillion. Money supply is about $30 trillion if you add it all up, right? We've never had that much stimulus in the U.S. economy ever before. So it's very difficult to have a financial crisis or a liquidity crisis or a slowdown when there's this much money out there. And it's not just the United States anymore, right? So global GDP is something like $100 trillion. And global money supply is like 108. And the liquidity in the financial system and in the corporate world for investment has never been higher. So you've got a full labor market. You've got a strong housing market, and you've got an unbelievably liquid and dynamic financial system that's being supported by governments all around the world. So that promotes growth.
Well, okay, but I mean that also suggests that the laws of economics, like the basic laws of economics, need to be slightly adjusted because what you're saying, it would seem, is that this sort of government-centric, neo-mercantilist approach to managing an economy, has limited downside. We have 3% GDP growth. We're at a relatively low inflation environment now. I mean, I know there was a print yesterday that showed a bit of a tick up, but I mean, it wasn't substantial. That the trend is pretty good. So we should just stay the course.
Well, I think so. I mean, this administration really has operated on a system of disruption. It's disruption by design. And it's really focused on stabilizing the global trading system, which has been skewed in favor of the Chinese for several decades. And I think that, if you look at monetary policy and fiscal policy, you have to also look at trade policy. And then you also have to look at really the five foundations of what this administration is doing, right? It's lower taxes, deregulation, cut the budget deficit, trade deficit, and national security. And all of that stuff's tied together. Trump is using the tariff, what do they call that? Bludgeoning.
Cudgel.
Cudgel,
Yeah.
right. He's doing that to really get our allies, Europeans, Canadians, Asian countries as well, to increase their tariffs against China. This is all about China. Nobody's trying to hurt the Swiss by bringing up 39% tariff rates against Rolex watches and chocolate, right? It's really about why does Novartis and Roche get patents that are developed in this country and then manufacture them over in Switzerland and charge 3 times more for the people here than over there. So this whole healthcare thing is all involved in it too, right? So I think all of this stuff is going to get negotiated down as long as other countries, the Western democracies, increase their tariffs against China.
But I mean, we also have to admit that these rate-setting exercises are totally arbitrary. I mean, tariff rates 10% for Brazil, 15% for Afghanistan, 39% for Switzerland. You mentioned 20% for Taiwan. I mean, why is it 20 and not 19?
Right.
Why is that 20? I mean, there's no precision here. There's no modeling or math being done. This is arbitrary, and which is why it moves around all the time, because it's like, if you do something wrong, I'm going to punish you by 5 points. If you do something good, I'm going to reward you by 5 points.
Right. This is really about getting people to the negotiating table so you get to a world where there is fairer trade, right?
Yeah, right.
Negotiations. So the average tariff that the U.S. has charged over the last 10 to 20 years is about 2%. The global average is about 6.5%. So Trump starting at 30 and 20 and 50 and 15. Over time, in the next 6 months or so, you will see global trade tariffs pretty much be balanced around the world. And to get there, every country has to do it in a different way, right? So there's steel and copper that's being refined in China, mined in Chile, coming through Canada, and going to Detroit, right? It takes a long time to get that stuff organized, right? And pharmaceutical stuff, too. So I think that over time, you will see the tariff situation balance. And the bond market sees that, Dan. That's the thing. I'm not really a political guy, and I really don't understand how political decision-making gets made because there's a lot of moving parts and national security is involved. But the point is, I really do believe that you will see an adjustment to trade, and the bond market sees it, and the inflation analysts see it. I think the biggest issue people, your listeners and the average investor and many portfolio managers have to recognize that the narrative behind this tariff issue has been stagflation and inflation, right? Lower growth, higher inflation, because the poor consumer is going to get smacked by, 30% more expensive costs for blue jeans and stuff like that, tennis shoes. But I think that you have to recognize that is a legitimate argument on one side of the coin. But if you're not looking at the whole picture, you're going to come up with the wrong conclusion. And the fact is that export nations, surplus trading nations to this country, need this economy as a market. And if tariffs go up because they've got a favorable structure behind what they're doing, or financed or subsidized by the government or whatever, those subsidies are going to continue to rise, because if prices go up, governments like the Communist Party in China will have to keep 400 million people working. They can't afford for them not to work.
No, I mean, I get the leverage play against
Right.
the Chinese communists. I totally get it. But I mean, one of the things, it's just the conflation is, I guess, some of the conflation is troublesome to me. It's like the idea that that we're taxing our way to prosperity, because what it's a tax. So that tariffs, we're filling the coffers, and we're punishing our enemies, and we're protecting our industries, and it's all upside. It's not all upside. I mean, and part of it is it's because the things you don't see. It's like saying the minimum wage, a $20 minimum wage, or any minimum wage,
Right.
is a good policy. Well, look, we raised it to $20, and yeah, I mean, maybe 18,000 fast food workers in California lost their jobs, but nobody really pays attention to that. And small businesses that rely on entry-level workers. So
Correct.
that the entry-level workers that aren't getting those entry-level jobs, the small business owner who operates in, relative anonymity, who has to make adjustments in terms of how he operates his business, but it doesn't generate enough attention for people to actually really have an understanding of the impact. It's just not big enough. So we can overcome it. The small business owner can, somebody can get another job, so on and so forth. But it doesn't mean that it's a positive policy. And that's what I would say about tariffs, generally speaking, too. We can overcome it because of all these other variables that you're talking about. But the idea that it is, that the way that Trump uses it, that I'm critical of, is, it's a hammer that can knock down every nail, and that's not it's just not true.
Right. I agree with you, and I think that there's a lot of misdirected sort of initiatives that kind of go out and shock people. But I would say this, that, why did this administration get voted into power? And what are the biggest issues that are facing this country? And we talked about this a month or so ago with the small businesses, right? So the biggest problem is that, inflation has been extremely high, and the percentages of increases in prices since 2019 are running at 25% or 40% or something like that. And who does that hurt the most, right? Small businesses and households.
Yeah.
So what do they vote for? They want inflation lower. They want prices lower. So how do you do that? What causes inflation? Deficit spending. So the budget deficit, right? It's $2 trillion. You bring that down by what is expected this year to be down by $350 billion. Inflation expectations are falling. Import prices at the wholesale level are falling. And what's the other thing? National debt, still rising, $37 trillion, right? If you reduce or eliminate your deficit spending and your deficit trades balances, those numbers go right to GDP. The trade deficit, if it goes down by $350 billion this year, which I think it will, that goes directly to U.S. GDP, right? So it's not just a negative to say, let's just disrupt everything. It means, what are the two big issues in this country? It's national debt, which is an enormous figure. I mean, nothing's ever been higher, right? We've got to stop it from going up. The budget deficit. In 2019, the government brought in $3.5 trillion in tax receipts and spent $4 trillion. That's a budget deficit of $500 billion. Last reading, it was $2 trillion, right?
Right.
Brought in 5, spent 7. If you bring that budget deficit down to COVID levels, right? Just 500, bring it down by $1 trillion, $1.5 trillion in 3 years, which can be done. Interest rates will go to 3.5%, 10-year Treasury yields, right? And what's that do for mortgages? What's that do for corporate profitability? What's that do for direct investment? All of this stuff is tied together. I think I was over in Europe talking, and I said, taxes are a big issue, deregulation are a big issue, budget deficit's a big issue, trade deficit's a big issue, and national security. All of them are important. And frankly, I think the deregulation thing probably means more to the economy going forward than the tariff issue. But
Yeah.
the tariff issue is getting 90% of all the narrative, because people,
Well, and also because the Europeans...
and I was in Europe, yeah.
Well, and they also don't want to confront their own tax and deregulation
Correct.
Issue, or
Correct.
tax and regulation issues, too.
Exactly.
Let's just talk about America. Well, how about talking about what you guys do?
Oh, yeah.
Why do you think your economies have been so sclerotic? I want to. So, but I mean, but the net of this, I read and listened to your video this morning, sort of, your summation
Yep.
of where things are at. But I mean, you think the rest of this year is going to be gangbusters?
I do. I mean, this deregulation thing is really important. Like, part of the deal with the EU is that they're going to invest something like $600 billion into this country, right? So they've never done that before. Not to that.
I mean, allegedly.
Well,
It's not international law. It's a promise.
If they want the tariffs to come down and not
right.
go up,
Right.
the issue is
Yeah.
bring in $750 billion worth of energy and spend $600 billion here. So Volkswagen, right? German sort of mainstream sort of automobile. Forget about the luxury market for a second because that's different. But, Volkswagen builds a factory in Michigan and it's robotic and they start making cars in 18 months, which they can do. They get to write off that entire investment, depreciate it, the first year.
Mm-hmm.
And that offsets their cost immediately. Think about that in terms of GDP.
Mm-hmm.
Think about that in your own household. That's money back in your pocket. So the amount of money that's coming into the country on a direct investment basis is really enormous. Now, does that mean that manufacturing is going to go from 10% of the employment rate to 30? Of course not. We have to keep our manufacturing costs low to attract people who are going to do industrial manufacturing in this country. That's going to be robotics. This thing all ties into the Industrial Revolution, right? I mean, this is why Tesla's at $318 a share, $15 a share, not $100. It's not about people not liking Teslas, right? Europeans are selling Teslas, right? They just don't want to be. Yeah, I see bumper stickers on them. I bought this car before Trump. This sort of stuff.
Yeah.
But it's really about what is happening in the Industrial Revolution in this country with AI, and it's a big deal, right? I mean, last year, gosh, corporate America spent $1.7 trillion on AI development. That's everything. Sort of energy and cooling and powering it and chips and all that sort of stuff. That number, that's 5% of GDP, right? Last year. That number is expected to be 20 to 25% of GDP by 2029.
Yeah, it's going fast.
All right, so that's 25. You're talking about $8 trillion worth of investment that's going to be depreciated. So that's, if you think about just the data on the math about the economy, it's hard to imagine that you can't see a 3% or a 4% growth here, especially when you've got a shortage of labor and you can address that issue. And you've got cheap capital, and you've got a regulatory base, and confidence is rising not only at the corporate level, small businesses and households as well. So I just look at the data. I'm not looking at, why things are chaotic and why statistics are not as precise as they should be, and all the short-term, decision-making or investment decision-making. Cheap money, favorable tax rates, ample energy, strong and growing, and as large a labor force as you've ever had, and the personal wealth in this country. People forget that too, right? GDP again is $30 trillion. Private wealth in this country is $170 trillion, right? They're spending, right?
Mm-hmm.
That top 10% of the country.
Mm-hmm.
I mean, I just flew up here. Every airport is packed. Every plane is packed. Every plane is delayed, right? I mean, honestly,
that's another story. But yeah, your point.
My commute from Miami to Chicago is 11 hours. It's. I'm not kidding you. Back and forth. So, the point is that there's a tremendous amount of spending happening in the consumer economy, and it's never been higher, and it's rising.
I wanted to get before we let you go. I wanted to get. We were talking off air, and I just wanted you to develop this for the listeners. That you said to me that the stable coin, that it's a big deal.
It is a big deal.
I mean, since so many of us, myself included, are wrestling with crypto, why is stablecoin a big deal?
Stablecoin is different, Dan, because unlike a Bitcoin, which has no intrinsic value, not that the dollar has an intrinsic value either, but there's the ability for the government to tax is there's a net present value of that. But Bitcoin doesn't have that, right? But stablecoins, what makes them different is that they are backed 100% by U.S. Treasury bills, right? So, number one, it creates a demand for Treasury bills. The market capitalization of the Bitcoin or the stablecoin market right now is $4 trillion, right? And the market value of the companies that are in the stablecoin market are $260 billion, and that's expected to be up to $2 trillion by the end of next year, right? So the stablecoin business is market valued at $4 trillion, which is the size of NVIDIA, by the way, right? And Microsoft, right? Those are the two $4 trillion companies. The reason it's important is because it allows financial transactions to be encrypted on a database and a ledger that gives transparencies to all prices, and you don't need central clearing for any trade. So I know banks in Europe who have been clearing Eurobond trades for a decade through blockchain, right? And they don't need Deutsche Bank, they don't need Barclays, they don't need Credit Agricole, you don't need JP Morgan. That means you don't need a central bank, right? Everything is clear, everything is transparent, you know exactly what every price is, and there's no fraud to it. So this brings a level of legitimacy to the crypto market that it hasn't had before. So to me, this is another disruption that we're seeing. There's disruption in healthcare and finance and all kinds of things, right? Travel and trade. This one has the opportunity to reduce costs in financial transactions, not only from the big bank level and the central bank level, but to every single business. So if you've got a stable coin, which is backed by a U.S. Treasury, you've got a legitimacy to the crypto market that it has not had since it's begun. So it's a game changer.
James Perry, founder, CIO, Perry International Capital Partners. Jim, thank you as always. Great stuff.
Thank you
Appreciate
very
it.
much, Dan. Good to see you. Thanks for having me.
This is the morning show more Chicago radio listeners are choosing. This is Chicago's Morning Answer on AM 560. The Answer.
Hey, it's Mike Rowe, and if you want to do business with a company that actually stands for something, switch to Pure Talk. I did. Sure, I appreciate being on America's most dependable 5G network with unlimited talk and text for just $20 a month. But what I really appreciate is Pure Talk's commitment to our military and to our skilled workforce. That matters to me. Save 50% off your first month when you dial pound 250 and say keyword Mike Rowe. Pure Talk, a wireless company that actually stands for something.
Life insurance. Why are you putting it off? Can't afford it? Too much hassle?